And the March quarter has been soft for Emami, with profits declining by as much as 28%. But this is, of course, on a cash basis, because the company does give you earnings on cash and non-cash basis due to amortization on the Cashing acquisition that they made a couple of years ago. But growth, on the other hand, has seen an uptick, and this is largely on account of the volumes that we saw move up by as much as 9%. To discuss the quarter gone by and take stock of what's happening in the upcoming quarter as well, we have the CEO on the phone line for finance and strategy, Mr. Bhansali. Mr. Bhansali, good morning and thanks for joining us. Let me just begin by asking you about what is behind this 9% volumes growth for this quarter, and to what extent does pricing have a part in terms of your overall revenues growth on a consolidated basis?
We have grown by 9% in terms of volume, while the overall growth is 12%. So that way it is good, and the growth has come from across the channels. While rural channels have grown higher than the others, but the general trade has also done good, and overall modern trade and all have supported. So from channel perspective, the growth has come from everywhere. And in terms of the brand also, if you look at the brands, the summer brands and other brands have also performed very well. So I think it is an all-round growth, and now it has started picking up. So I think if the momentum continues, you can see a good growth in the times to come.
So what plans have you laid out for the summer in terms of brands and product lines?
See, summer has already set in, and Navratna is an important brand and is doing good. So we have some brand extensions in Navratna. Navratna Eye Cool Talc with Dynamite variants. So some of the variants have been launched. Few new launches have also come. Apart from Navratna, in other categories also the new launches has come. Kind of hair color we have introduced. We have introduced the Healthy Fairness cream in the Boro Plus also. In face washes, in the healthcare also some of the new launches. So the new launches and also growth from the core brands would drive the growth.
So it has been a challenging past few quarters for Kesh King, however. How are you dealing with intensifying competition even as Kesh King undergoes some changes internally?
So two aspects. While the overall the market has broadened because of a lot of traction from by the consumers, and also because of the increase in the competitive intensity across. So there has been a lot of buzz around this kind of a category, and while there had been challenges because of the disruption in the wholesale channel particularly, and increasing intensive competitive intensity, but I believe we are taking so many steps. We are investing behind the brands, and the product has been very superior to the products which are otherwise available in the market. So all taken together, we feel that going forward there will be a good growth which you can witness.
So with the investments lined up, can we expect some contraction in the return on capital?
Return on equity would still be good, because if you look at the overall EBITDA margins are very high, and we will continue to drive those kind of margins despite investments behind the brand. So we expect no substantial change in the margin profile or the returns.
So now we understand you can't give us a guidance for FY19, but can you also at least give us an indication of what we can expect with respect to your revenues, volumes, and eventually margins as well?
What I can give you an indication about how the economy is performing, and if the economy is doing good, and also if the seasons are favoring, we are rightly positioned and poised to take an aggressive growth, because of the subdued past and subdued performance in some of the quarters past, because of obvious reasons of GST, demonetization, and many other factors. But now I think we are poised for a good growth, provided other factors also play a good role.